My story begins exactly 100 years ago today, February 5th, 1925. That was when Edward Nevin, seen here in this photograph, was born in Pembroke Dock. The fourth and last child of the soldier in the middle there, William Nevin, and his wife Mary Helen, who's seen on his left in that photo in the white, and that's his mother on his right. So this photo was taken in 1917, about the time of their marriage. William had been invalided back to Wales after the Battle of the Somme, and they got married. They had 3 other children, and Edwards was the fourth and last, born in 1925. It wasn't the best time to be born, because it was a time when Britain was just going back onto the gold standard at the pre-war rate. This meant that the Bank of England guaranteed to convert sterling paper notes into gold at a guaranteed rate of about a guinea, being a quarter ounce of gold. If you went in with your guinea note, you could demand a quarter ounce of gold in return. I tried this the other day. It no longer works. And it was only maintained in the late 20s by a regime of high interest rates and severe public spending cutbacks. And one of the people who suffered from those cutbacks was William Nevin. He lost his job in the Royal Naval Dockyard in Pembroke Dock when it was closed in 1926, with 4 children to support. Not a great time. He fortunately got work with the Pembroke Dock Town Corporation as a dustman, but at much lower wages. However, in the early 30s, after the Wall Street crash, the gold standard collapsed in 1932. The Bank of England could no longer sustain it. The pound dropped severely in value, interest rates came down, and the economy began to recover because it's cheaper to invest. So it was better times for the family. William, he's the gentleman in the Panama hat there, he found work as a government official, so it's better times for the family. There you see his mum, his wife, and his 4 children. Edward Nevin is the smallest, right in the front row. So these were better times. It was a time period of recovery and relative prosperity. That came to an end in 1939 with the outbreak of war. Pembroke Dock was the most heavily blitzed town in the whole of Great Britain in proportion to its population. This is not a generally known fact, but there were 2 reasons for it. One was it was a military base for all 3 of the armed services, the Navy, the Army, the Clanion Barracks, and the Royal Air Force. Second, it was also a very soft target. Most of Britain's anti-aircraft defences were in the southeast to protect London. Pembroke Dock, very easy to fly into if you're a Luftwaffe pilot. Every night, over the channel, drop a few bombs, back again, very low risk operation, very high returns in terms of military damage. And the Clanreath oil terminal fire in August and September 1940, that was the greatest fire in Britain since the Great Fire of London. It burnt for several weeks. The oil terminal was hit, as you can see in these photos. It took the entire Welsh fire service almost to put it out. 5 Cardiff firemen died. Many more were injured to put it out. The Blitz also destroyed Pembroke Dock's own community centre, the Temperance Hall, which you can see here, which wasn't rebuilt for another 17 years and reopened in 1957. So it wasn't a great time. Fortunately, there was no bomb that accidentally fell on number 47 Upper Merrick Street, which was where our family lived. So they survived. And Edward Nevin left school at the age of 16 in 1941 to take up employment with the Ministry of Aircraft Production. In 1943, at the age of 18, he joined the army proper, the Royal Electrical and Mechanical Engineers. By the end of the war, he'd been promoted to sergeant, and when he was demobilised, the post-war government had introduced a scheme to encourage demobilised servicemen to take up further education if they so wished. So, having left school at 16, he then got the opportunity to go to university with the help of the funding that the government provided. He was demobilised in the summer of 1946 and started to study at the University College of Wales in Aberystwyth that autumn, studying law and economics and graduating with a first-class honours degree 3 years later, and then continuing to study at Aberystwyth, doing postgraduate research on the market in gilt-edged securities, September 1939 to December 1949. This has never been published. You can see it's dated September 1950, but it's a forensic examination of how the government, the British government, helped to fund the war through its borrowing programme in that period, and also the post-war period with the Labour government seeking to mobilise funding for its ambitious programme of social reform and national public ownership. That was well received, and he managed to get a fellowship to Cambridge on the back of it, where he went back in time to study what exactly had happened in the post-war period, which had so affected his own family. He studied the what's called the cheap money era of the 1930s, and published a book called The Mechanism of Cheap Money in 1955. Prior to that, his first book, coming back from Cambridge to be a junior lecturer at the University College of Aberystwyth, was on the problem of the national debt, which remains an issue of concern today, although in the years that followed the publication of this book, it looked like there wasn't a great problem at all, as the national debt, which amounted to more than twice national income in 1945, started to come down. So, there are three principles of public debt management which emerged from this early work. What we call today cheap money, quantitative easing, plus budget deficits, lead to the inflation and the collapse of cheap money. This was a problem that Dr. Hugh Dalton, who was the Labour Chancellor from 1945 to 47, faced. He tried to pursue a policy of ultra-cheap money to raise money very, very cheaply for the post-war government. But it did lead to inflation, it led to a significant devaluation of the pound, and eventually his policy collapsed. Conversely, low interest rates can be sustained if the government runs a primary budget surplus, which is what happened in the 1930s. And finally, consistent budget deficits cause an increase in the national debt and rising interest rates. So eventually governments have got to start running at least a primary surplus, which means that they've got to raise enough taxes to cover at least day-to-day expenditure if they're not to suffer an increase in national debt and more expensive borrowing. So, this part of the talk, I'm going to be assisted with this. This is my lucky Jamaican $20 banknote, adorned with the image of Noel Nethersole. He was the Jamaican Minister of Finance in the late 1950s, and this really was the next chapter in Edward Nevin's career, because in the summer of 1957 he received a letter from a gentleman called the Honourable E.R. Richardson, who was Financial Secretary to the Jamaican Treasury, which was equivalent to Permanent Secretary here in the UK. So he was the head of the Administrative Civil Service as far as finance was concerned. And he invited my father to come to Jamaica to take up a post of head of external finance in order to create a central bank for the island, which was preparing for independence. Many years later, I heard my brother-in-law, the late Harry Smith, regale patrons of the Newton Inn in Mumbles with a story about how the gentleman on the right of this photo, Harold Macmillan, who was British Prime Minister at the time, had, quote, personally handpicked Ted to help the Jamaican government prepare for independence. It was only a little later, when the effects of the amber nectar served in the Newton Inn had worn out, it occurred to me it's rather unlikely that Macmillan, the Prime Minister of the day, he had a lot of problems to contend with. You know, the winds of change sweeping through Africa, the Profumo affair that threatened to split his Conservative Party, indeed, the existential threat to the human race of the Cuban Missile Crisis. I don't think he spent an awful lot of his time pacing up and down Downing Street, wondering about who should be sent to Jamaica. No, the truth, as it turned out, was rather more prosaic, but equally interesting. The person who made the recommendation was a gentleman on the left. This is Sir John Hicks, later to win the Nobel Prize in Economics. And he had recommended to Mr. Richardson, the head of finance in Jamaica, whom he had taught when Mr. Richardson had been a student at Oxford, he had suggested my father might be a suitable candidate for the head of external finance. So that's how the recommendation came about. Now, you might have thought that a relatively minor appointment in the great scheme of things would have gone through uncontroversially. Nope, not a bit of it. There was very severe reaction, resistance from what my father describes as the most reactionary department of the British government, the Colonial Office. In his memoir, he relates how, after one particularly fractious meeting, he basically got into his car, drove up to Liverpool, and booked his own passage over to Jamaica. Now, why was it that the Colonial Office was so unenthusiastic and, to put it in a gentlemanly way, adopted a rather unhelpful attitude towards this appointment? Well, I wonder, this is purely a personal theory. In 1945, the French government had created the CFA franc zone in Central and West Africa, which still exists today, whereby the franc, the CFA franc, the West African and Central African franc, was pegged to the French franc. Today it's pegged to the euro, at the rate, I think, of 656 francs to 1 euro. So, the monetary policy, the currency reserves of these 14 nations that you can see on this slide are under the control of the European Central Bank in Brussels to this very day. I wonder whether the Colonial Office would have much preferred Jamaica didn't set up a central bank at all, but had gone down the French route. Tell you what, boys, why don't you leave all your money here in London? We'll decide the interest rate and we'll look after you. If so, it really is a credit to Mr. Nethersole that he had the perseverance and determination to overcome the resistance of the Colonial Office. So, here we are, Ministry of Finance in Jamaica, Kingston, July 1958. You can see, by today's standards, it's quite a Spartan office. There's no desk laptop. They hadn't been invented then. There's no internet. That hadn't been invented then. There's no mobile phone. That hadn't been invented then either. All there is a single, you can see a black telephone just at the bottom right-hand corner, and that's about it. Did all this matter? Well, ultimately no, because what really mattered was the relationship that the head of external finance built up with his ministerial boss, Mr. Nethersole, and the civil servants with whom he worked. And my father dedicated this, well, he wrote this book actually on this phase of his career, Capital Funds in Underdeveloped Countries, and he dedicated it to the gentleman who adorns my lucky $20 bill, Noel Nethersole. And the only other dedications he made of any books were The Problem of National Debt, was dedicated to his own parents, and The Mechanism of Cheap Money to his wife. So that tells you in what esteem he held his ministerial boss. And what this book does is set out a vision of central banking in an emerging economy inspired by that phase of his career. And it really has three different elements. Firstly, equilibration. Secondly, regulation. And thirdly, creation. So, equilibration means ensuring the balanced flow of funds within the financial system from savers and depositors in banks on the one hand, and entrepreneurs and borrowers in both the personal and corporate sector on the other, without sudden jolts in the flow of money, such as happened in the run-up to the global financial crisis when bank credit suddenly exploded, or in its aftermath when there was a credit contraction, both of which were rather damaging. Secondly, regulation and supervision of the banking system to ensure that banks managing their depositors' funds prudently and lend them with diligence, secured with appropriate collateral. Now, these are the standard functions carried out by central banks in developed economies, in the Anglo-American economy, for example. But these are economies with established banking systems, mature bond and stock markets, liquidity provided by insurance companies, pension funds and investment trusts. Of course, none of these existed in colonial Jamaica back in 1957. So the third and central element of the Jamaican model is creation. That is to say, and I quote capital funds, financing long-term development within the economy and giving active and positive encouragement to the growth of local capital and money markets. How? Firstly, by creating specialist financial institutions, including investment trusts and so forth, and also development finance companies. Secondly, sponsoring the development of national securities markets, which didn't exist in Jamaica and still don't exist in much of West Africa that I mentioned earlier. And thirdly, managing the government's own borrowing programme and developing a market for government bonds and treasury bills. And today is also the anniversary, the 66th anniversary, of the first borrowing by the government of Jamaica, the first sovereign bond issue, February the 5th, 1959, in New York. It was also the first time any British colony had issued its own sovereign bond. And that raised, it seems a relatively small amount by today's standards, $12.5 million at the time. Today's values, that's more like $200 million that was raised in Wall Street that day. And that helped to fund free primary education for all Jamaican school children, enhancements to the health system in Jamaica, and affordable credits for small farmers. So it's quite an important, it was quite an important moment, both in the history of Jamaica and the wider issue, the wider history of bond issues across what were former colonial territories. So this photo is from our family album, and the people who were on that team that day, there's my father, next to him is the Honourable Noel Nethersole, the Minister of Finance, then this is the Honourable E.R. Richardson, the Permanent Secretary or Financial Secretary in the Ministry of Finance, and finally the Honourable Ewart Forrest, who is Solicitor General, that's the senior law officer in Jamaica. So it's quite an important moment. But it is quite a poignant photograph because Mr. Nethersole died just a few weeks after. He suffered a heart attack and he passed away at the age of 55, I think. My father later recorded, and I quote, "On March the 17th, 1959, my minister and good friend Crab Nethersole died of a heart attack. On the 21st, we went to Crab's state funeral. On the 22nd, I had a small farewell do in the ministry, to which Norman Manley came and said a few kind words." Now, Norman Manley was the chief minister of Jamaica at that time, and I think it was very good of him to come to this little leaving do, because he himself must have been quite upset at the sudden and unexpected loss of an old friend and loyal colleague. My father's account concluded that on March 23rd, 1959, we boarded the Reina del Mar, that's the liner seen here, and took our leave of Jamaica. So less than a week after Mr. Nethersole's death, we were on our way back to Wales. Well, in fact, we were bound for Liverpool, England, out of Kingston, Jamaica. But my father then took up his post at the university again in Aberystwyth. What we're left with today is a few photos of that time. That's me, April 1958, having a nap in Morgan's Bay. Me and Christine playing in our front garden, which was at 5 Belmont Road in Kingston, I think. And that's me, Christine and our friend splashing around in the sea in Long Bay, Jamaica. And there's a photo of the 5 of us children with Albert. Albert was what might be termed the major domo of our little household in Kingston, if that's not too grand a term. And that's taken in I think, March 1959. And here's another photo of Albert and his cousins taken on the same day. His cousins helped with the maintenance of the garden and the house. Now this is rather curious because this photo would have been taken literally as we were packing up to leave Jamaica. So why would someone take, I wonder why would someone take a photo at that time? It seems odd. And I can only think that it was in order that we wouldn't forget the people who looked after us during our time on the island. And here we are in April 1959 on board the Reina del Mar at a children's party on the ship with my sisters. That's Mary, Christine, Tessa, and I'm at the back with a wizard's hat on. And here we are all these years later, remarkably enough, still here, but without the party hats, obviously. Well, maybe later. Anyway, finally, Mr. Nethersole. Well, here's a photo of him taken at 1 a.m. on February 6, 1959, on his return to Jamaica after that first sovereign bond issue. Today, his statue stands at the Nethersole Place in Kingston, Jamaica, at the entrance to the central bank. He's regarded as the father of the bank, and by placing his statue at the front of the bank, at its entrance, I think it's recognised he's also a sort of guardian to its probity and integrity. There is, wrote William Shakespeare, a destiny that shapes our ends, rough hew it them as we will. And as Mr. Nethersole's life and early death shaped our destiny, I think it seems appropriate to conclude the presentation with the tribute to him that opens Capital Funds in Underdeveloped Countries here, which reads as follows. Respectfully dedicated to the memory of Noel Nethersole, good friend, tolerant master, faithful servant of his people.